Investing in regional South Australia, has it done its dash and is it time to get out?
Population growth isn't the strongest, but the economy is doing well. From 2021 to now, 78% growth.
This episode, together with Junge Ma, senior research analyst at InvestorKit, we answer a question you guys have sent in. 3-bedroom, 1-bathroom house bought 4 years ago. Should I sell now or should I keep for a bit longer? Starting off with the state of South Australia, zooming into the LGA and town you guys have asked for.
Unemployment rate is now 4.1%. 10 years ago was 7.6%. As long as in the property market supply is limited, demand is high, it'll grow.
Finding out what the data says could be the best way forward for us as investors. Junge Ma, is it a no or a go?
I have to make it a bit more complex because
If you've been wondering whether regional South Australia is still a good place to put your money, or if maybe it's done its dash, you're going to enjoy this episode. My name is Todd Sloan. This is the Pizza and Property Podcast, and this episode is powered by Property Developer Network, InvestorKit, and Future Proof Property Advisory. More about our amazing show sponsors in the show notes below. But right now, let's jump straight into this episode with senior research analyst Junge Ma. Junge Ma, how are you?
Very good, thank you. How are you?
Very good. I think this is the first one in a while that hasn't been on Victoria or Melbourne.
Right.
It's good to actually be checking out a little bit of South Australia. And more specifically, we're talking regional South Australia, which it's not like Queensland or like Victoria, where there's a whole lot of regional choices. It's kind of only a couple that you'd really look into. So this episode's question has been sent in by Luke, and we're looking at Mount Gambier. His question is, 3-bedroom, 1-bathroom house on 900, it says 900 swim, but I'm assuming you mean square meters. So 900 square meters, bought 4 years ago. Should I sell now before the market changes, or should I keep for a bit longer? Now, it might actually have a swimming pool. Maybe that was intentional, but let's just go with 900 square meters. So big block, 3-bed, 1-bath. You want to start with South Australia and start working our way into answering Luke's question?
Yes, why not? South Australia. We're talking about population growth and economic growth. So, population growth isn't the strongest.
Yeah.
Latest data was 1.1% per year growth. It was the second weakest
I was going to say,
all states.
that's like well below like Australia average, isn't it?
Australian average is now 1.7, not really high.
All right. So no one wants to come.
But the thing is, I do think for South Australia, population growth is never really strong.
No.
But the economy is doing well. That's the most important thing.
You know, the first thing that pops to mind is that clip of Milhouse from The Simpsons. It's like, but my mom says I'm cool. It's like Adelaide. Anyway, so population growth, not that strong. But like you're saying, it's never really been that strong. Like South Australia has never been the place that everyone has flocked to in like a mass migration. Are there any sort of good parts that we can like touch on, or is the whole state economy looking a little bit average overall?
The economies are looking good. I mean, not outperforming Australia average a lot, but it's looking good. First, the job market is active. Unemployment rate is now 4.1%, in line with Australia's average, but it is actually much lower than it was 10 years ago. 10 years ago was 7.6%.
Yeah, wow, really changed.
So yeah, it's really improving.
All right, so unemployment rate down from 7% to 4% essentially. So like 3% down.
Yes.
Okay.
So you can tell, right, the job market is really being more active.
And what about GDP?
GDP growth doesn't really stand out. If we want to be more specific, gross state product, GSP.
GSP, okay.
So many levels.
Love it.
So last year, financial year 23 to 24, it was 1.2% year-on-year growth. Slightly lower than Australia's average, 1.4%. But I think Australia's average was skewed a bit by WA, Queensland, all these fast-growing states.
What do you think it is with South Australia then? Because like I find it funny, like this has always been the state that people kind of go, oh yeah, Adelaide. Like, and I get that. I do find it's more and more common though. Like people come here to the studio, I have people all the time, different professionals, and they're like, I actually like it here now. Like it has actually changed. It's not reflective in the data that you're saying though. It's sounding like economically, we're still a few steps behind as a state.
Yeah, it's just not growing the fastest, but it's still improving. And I guess lifestyle here is great, attractive. So yeah, over time, people would move in, or more people would move in than moving out. And yeah, the economy is on its way of improvement.
Let's sharpen a little bit more to the LGA of Mount Gambier, which I think this is actually one of the first ones that we've done where the LGA and the suburb are pretty much the same thing.
Yes.
Like for such a large regional town, it's got like 4 suburbs in Mount Gambier or something. So it's, yeah, anyway, that's going to be a different, interesting one to unpack together. But is there anything that you wanted to wrap up South Australia with before we head into the LGA of Mount Gambier?
South Australia, like we said, the population isn't the strongest, but the economy, the job market is looking good.
So overall, not looking amazing, but not looking bad. It's just like a solid 5 out of 10.
No, I would say 8 out of 10.
Okay, all right.
I love South Australia.
Okay, all right. What about the LGA then of Mount Gambier? How does one of its smaller regional centres look overall?
Population growth, 0.3% per year. So I guess it shares the vibe of South Australia. Population growth is not always the strongest.
Can we dive into this a little bit? Because I know there's going to be a whole bunch of people going, hold on, wasn't Luke's question about like selling now because like things have done well? Right now, you're painting a picture of a place that's like, why would you invest there? But Mount Gambier has done well, hasn't it?
Yes, property market did really well.
Okay. I want to use this as an opportunity to actually talk more about isolated indicators because I know this is something that I speak about with Arj a lot on the show, and it's like just because one thing looks really good or potentially really bad, and it's not that this is bad, but it's not the greatest, doesn't mean that the overall picture is really good or really bad. Can you sort of jump into that in a little bit more detail?
I guess economy, population growth, interest rate, and perhaps infrastructure investment, all these things, they are influencers. They do have more or less influence on the property market. But in the end, the growth, property value growth is still very much determined by supply and demand. So yeah, as long as in the property market or housing market, supply is limited, demand is high or improving significantly, it'll grow.
With that in mind then, can we start talking a little bit about building approvals and what's actually in the pipeline for Mount Gambier?
Yeah, now the building approval rate is 1.5%.
Okay.
I guess you know, usually we say 2 to 3% is kind of the balance level. 1.5 is not really low, not as low as many other regional towns. But it's
well below balance.
Yeah, well below balance.
Okay. And so this is one of the factors that's coming back to, like you were saying before, it's not all about 1 or 2 indicators. It's like a supply and demand game where right now the supply might not be like drastically undersupplied, but it still is undersupplied.
Yes. And also this 1.5%, it must be triggered by the good growth over the past few years. And when it started growing in 2021, 2022, the incoming supply should be much lower. I guess the market didn't move much in the 7-8 years before 2021. Yeah, there couldn't be much new houses being built. And that's kind of led to the very tight market and very good growth.
So tell me more about the LGA of Mount Gambier.
So yeah, we were talking about population growth and now economic growth. Not really looking the best.
Okay.
Because last year, GRP growth was actually minus 0.1% growth. So it declined a little bit.
Minus. Okay. What's going on?
So yeah, I am looking at economy.id.com. They have all the GRP contributor numbers. Based on this, construction industry has declined. The output has declined. The agriculture, forestry, and fishing industry declined.
Okay.
Mainly because of forestry and logging sector.
So is there like a whole bunch of vegans like moving into the area? Like
they should have something to do with the nationwide slowdown of housing construction.
Got it. Okay, so you're looking at this going that a lot of their economy is tied to logging. Not all of it. It's not like it's like a mining town sort of equivalent. However, it's when you start stacking these different industries on top of each other, a big portion of that is tied to building actually happening, construction. And so because construction's slowing down, this feels like a little bit of a double-edged sword because it's like construction slowing down, good thing for property investing, but construction slowing down, bad thing for local economy of Mount Gambier.
Right.
Got it. Okay. But also good thing because construction slowing down. This is a bit of an interesting one. All right. So tell me some good things about Mount Gambier because I'm already feeling that this is going to be like a sell, Luke. Get out of there. The growth is done. But I know you often throw a few little twists and turns along the episode. So are there some good things about Mount Gambier that we haven't touched on yet?
So from 2021 now, because of the question, from 2021 to now, it actually achieved 78% 8% growth. That's approximately 10-year growth for many other cities.
So we're talking, what is that, averaging 7.8% over 10 years if it was averaged out over a decade?
If it's a 4-year, it must be higher than, I guess, 10 or 15% per year growth,
it's
approximately.
Huge. Yeah.
Yes.
Okay, so it's
huge.
killed it.
In recent years, we are seeing it slow down from 2022 to summer 2024. The inventory was going up. Days on market was going up, looking like it was losing a bit pressure. But now the pressure relief has slowed down, even stopped.
Why is that? Is it mainly what we've just been talking about, like the job industry is starting to slow down the economy, or the GRP is starting to go down, and it's kind of like everything is following that, or are they not really as correlated?
I don't think they are really correlated. The slowdown was basically because of its cycle position. It sped up, it did really well, and naturally you have to cool down a bit. But after 1 year, the 1 year and a half slowdown, the affordability advantage kicked in. It was 2024 when our interest rates were really high. But at the time, Mount Gambier was very affordable. The yield was still good. The local job market was active, so housing demand was still high. That is why I think market pressure just sustained.
Okay, let's actually talk a little bit more about Mount Gambier then as more of the suburb level. Because right now you're not painting the best picture. I feel like that's accusatory. Like it's your fault what's going on in Mount Gambier. the picture being painted doesn't sound amazing. Okay, but you've just touched on something interesting there though, talking about like the affordability level. Because I know we've talked about Townsville a few times. So many people are like, it's done, it's dead, it's gone. And then you look at the data, and you and I were just discussing this off air, and it's like, actually, no, like maybe the days of like 20% growth every year, yeah, that's never going to stick around forever. But there's still a lot of solid indicators because of an affordability is one of them, rental yield's another. What if we're talking about Mount Gambier right now at more of a property level? Does it still have great affordability? Like a rental yield still looking like pretty healthy? How does it look that way?
Yeah, it's still very, very affordable. Median price is now still lower than 500K, 495 to be specific. The inventory for the suburb, it's actually very good, 1.6 months of stock.
Okay, and just reminding anyone that's newer, wondering what inventory is. So a balanced market is usually sitting, what is it, around sort of 2.5, 3.5?
For now, I guess 3 to 4.
3 to 4?
Yeah.
Okay, all right. So 1.6, pretty tight.
Pretty tight. And it was going up, as I said, a year ago, but now over the past year, it really didn't change. 0.7% lower than 12 months ago. So it's being stabilized there.
Okay, so there's all these economic factors pointing towards like things aren't amazing, but then the actual stock levels are still pretty low. Building approvals are pretty low. Yields, actually, I don't think, did you touch on yields? Are they still pretty strong?
Yield, not yet, but 4.6%.
Okay, so yield's not incredible, but it's still not too bad.
It's kind of healthy.
So already looking at this, it's sounding like as a standalone investment, if you could maybe get something that was like a hell of a deal, maybe you're renoing, you're doing something to it, you're adding a little bit of value, maybe Mount Gambier is still looking pretty good. But if you're looking to buy somewhere and have it shoot up 20% over the next 6 to 12 months,
it may not be the place.
Exactly. Yeah. So as far as Luke's question here, is it a no or is it a go? And I need to define this now because he's actually talking about selling. So let's say selling is a go and not selling is a no. Junge Ma, is it a no or a go?
I have to make it a bit more complex. I don't want to say no or go on this one because it's very personal. If Luke has to sell it for some reason, maybe borrowing capacity, maybe some financial pressure, I do think it's not a bad time to sell because market pressure is still there. Housing demand is still high. And if you sell now, I guess you can get a pretty good price and you have already gained a lot of growth over the past 4 years. But as you know, I mean, InvestorKit and we always support long-term hold. And for this one, I'm pretty sure 4 years ago when Luke bought it, it was very affordable with a very good yield already. And with the rental growth happened over the past 4 years, I believe the yield on purchase now could be more than 10%.
So looking at this now, it's like there's still some pressure in the market. Now might be a good time to sell. I want to add my 2 cents on this as well. And this is something I was actually talking with Arj about just the other day, just recently. It's like sometimes it is right to sell. And again, like you were saying, it depends on your portfolio, your goals, your personal situation. But the big caveat, and this is what he was like we were discussing, it's like if you've got somewhere else to park the money, Because otherwise, if you sell and you're like, yeah, I got all these plans and I'm going to do this and that, and then you don't do anything and you just sit on cash, then all of a sudden, if you're not doing anything smart with it, or you're just going on jet ski safaris or whatever, it's like, well, even if the market didn't go up by another 10, 20% and kill it, you're completely out of the market. And now you're just completely in liquid cash. So the big thing that the conversation was kind of wrapping up with the other day was more around, if you know what that next step is and selling is actually the right step for you, kind of sounds like to me what you're saying is it's potentially a go, it's potentially a sell, but the potentially needs to be like highlighted, caps locked, underscore, like it's because there's so many different variables to this.
Yeah.
All right, Jung, and is there any final words of wisdom or anything you'd like to say about Mount Gambier before we wrap things up today?
Mount Gambier is in the second half or later part of its current growth cycle. It has slowed down a bit, but pressure is still relatively high there. Moving forward, I believe there will be growth, maybe more moderate. All the current indicators don't show that it will decline.
Right, but the days of 20% every year, that's kind of gone.
It's hard to,
Yeah, gotcha. All right, Junge Ma from InvestorKit, thank you so much for jumping on the show. Really appreciate your time.
My pleasure. Thank you so much.